Okay, guys, I want to go through one of these reconciliations to guide you through it. I'm looking on page 252. You should go there with me. This is a bank reconciliation. And of course, the purpose of a bank reconciliation is to find out the reasons for the differences between the bank statement balance. We get the bank statement following the end of the month. Our checkbook balance or is actually our cash balance or cash in bank. So that we're showing 9 grand, the bank is showing 82. The purpose of the reconciliation is to find out the reasons for the difference and we'll try to find any errors if there are, any unrecorded transactions that need to be recorded. But the bottom line is to come up with a reconciled balance, and that's the amount after you do your adjustments below. That's the amount that you're going to report in your cash account when you do your balance sheet. So the asset that you have, despite it showing $9,000 in the account, after we record the transactions that had not yet been recorded on our books, we are going to, after posting, we're going to have an $8,730 balance. Now, you can read the items one by one. Checks outstanding, what these represent here in item A. There are two of them, number 850, excuse me, number 122 for 850 and number 130 for 720. That looks like it adds up to what, $1,570. Now, the outstanding checks represent checks that we wrote that have already been subtracted and are reflected in that $9,000 balance. So that if they are in fact subtracted already in our from our books, the purpose of the reconciliation is to get the two balances in sync, so that that same 1570, which has already been subtracted here, has to be subtracted on the balance per the bank side of the reconciliation. That's probably the most common reconciling item on reconciliations. Has been, is, will be, and so on. We pay our bills by check. We send them out maybe toward the end of the month. They don't get to the recipient, or the recipient hasn't yet presented them for payment. Therefore, they have yet to be subtracted by the bank. So we want to kind of play catch-up ball. We're going to do to the bank side what was already done on the books. We subtracted 1570 here, but not yet on the bank has not yet got those items, so we will do an as if they have subtracted the 1570 and subtract that from the subtotal that we have already over here. And in B, they talk about a deposit in transit. What that means is that we've got cash receipts that have already been recorded and are included again in that 9,000. So a deposit in transit simply means that it's on its way to the bank. We might have dropped it off in the night deposit box and it hasn't got credited to our account for the period ended July 31st, or we just haven't got around to depositing July 31st cash receipts. So, but the bottom line is we recorded the cash receipts so that if we've got the whatever I did, if we've got the $2,100 already included here, then we have to, I don't know what I did, but I'll keep going. But we have to add the $2,100 here just as if it was recorded, included in the bank balance, because we've got it in the 9 grand. The bank does not have it in their 82. So we're going to do to the bank what we did to ourselves and add the $2,100. So the bank side is done. You got the $8,200 balance per the bank statement, and you're going to add the deposits and subtract the outstanding checks to get a reconciled balance. And on the other side of the reconciliation, you're going to see an item, if you're with me in the book here, it indicated that in item E, our bank, the name of our bank is French Bank, collected a note for us. We are slacks.com. So that this guy, whoever owed us the money, okay, they don't mention the name of the maker of the note, but they sent the check to pay the note directly to our bank instead of paying us. So not an uncommon practice. So that Slacks, we got a credit by the payment of whoever owed me the money, whoever owed us the money of 1090 came in and paid the bank. So the bank has the dough, but we don't have it yet. So apparently the total proceeds from the note were 1090, but there was a $5 collection fee. So we only want to see 1085 up here. All right. We could show the 1090 and then subtract the 5 down here. We could show plus 1090 and minus 5 as a bank charge, but we'll let it go as it is. All right. So that, and then the other two items on the bottom are indicated in the book is that there was a debit card transaction that apparently we did not subtract from our checking account, which we should. Most of us do online banking today, and sometimes don't even use a check register and have the bank report everything to us and trust them. But under any circumstances, if there was an unrecorded transaction on our books that we found on the bank statement, you see, we find that 1300 as a subtraction on the bank statement, so we have to subtract it on our books, just like we found the proceeds of the note. When we examined the bank statement, we saw a plus or a credit of 1085. Okay, we saw a credit of 1085 that we had not recorded yet on our books, so we had to come in and add that 1085. Similarly, we saw two deductions on the bank statement that we had not yet subtracted. So again, we're playing catch-up ball. The bank already added this guy, subtracted these two guys. So when you come down to doing your reconciliation, you got to play catch-up ball and get your books adjusted, because you in fact do have 1085 in cash, which you have to debit to the cash account, and you did pay to the bank or pay via debit card and didn't subtract it from your balance, 1300. That's got to come out of your balance, as does the bank service charge, which showed up. Okay, so when all said and done, we've got the two balances to agree. Now, that is the asset that you should be reporting for cash, $8,730, not $9,000, even though your cash account, okay, shows $9,000. After you make your adjusting entries down here, as you can see, the 1090 is the addition to the cash, which is actually the 1090 minus the 5. So they recorded that as a debit to cash of 1085. So it's in sync with what you see up here on the reconciliation, but the amount of the note was 1090. So that's how we have to take the note out of the books for the full 1090 that it was on for, and the difference is an expense that we have to record. So that the cash debit is 1085, which agrees with the cash credit that we got from the bank. And the $5 differential is like a little loss that we take. We debit an expense account for that $5. Okay, so there's your debit. So that if you posted, right, a 1085 debit to the cash account, it would bring it up to $10,085. And then the two credits to cash, you can see here, add up to $1,355. Those are two deductions, and you can see that the cash account is in fact credited. And you know, cash being an asset, when you make a journal entry to credit cash, you're reducing the cash account. So that if you could kind of visualize a cash account having a $9,000 balance, then a 1085 debit posting, and then having a 1355 credit postings, then the ending balance is going to show up at 8730, which is your correct amount of cash. Apparently, the two debits here, the 1300 was described as having a debit card purchase for a piece of equipment, so accordingly we debit the equipment account. So it would be like debiting equipment and crediting cash for 1300. They do it in a compound entry here by debiting miscellaneous expense and adding that 55 into the 1300. So the sum of the two debits equals the credit or the reduction to cash of 1355. And the explanation is to record the purchase of equipment made with a debit card, and also to record the payment of the $55 service charge. So I think that covers it. So this is a good example. I'm also sending you another video that I did on taking care of errors that could be possibly made by either the bank side or the book side. So that's a separate item. But there's your reconciliation. There are the entries, and I hope you understand it. If you didn't before, I hope you understand it now. Done.